So yeah, these are just combined state and federal. Again, you look at California, that's pretty bad. A third of your money when you sell investments will go to the government. Other places, not so awful, but still, it's pretty bad. This looks like the federal rate must be like 20% or so. I'm not sure. I'd have to look at that. But it is pretty high. So it's lower than you pay in income tax, but it's still pretty high. So those are pretty much most of the name brand ones. Excise taxes, since none of you should smoke, because it's bad, won't really come up for you. Although they'll come up with gas and a couple other things. They're taxes on specific things. So like tobacco or gas or like alcohol. All of those are taxed just because the government hates them. It's like, we can tax those people, that's all right. Like, it's very politically expedient to tax smoking, right? Gambling is the other one. Like if you win the lottery, they immediately take like half of it. So ridiculous. So those are all of the major ones. This is just gasoline tax, an example of that. Yeah, 52 cents in California. You can tell I really ran in California. And then I think, yeah, like 22 cents in Iowa. All right, so enough of the heat maps. How do I get it? The interesting part is, I guess my job today is to tell you how you can at least look at paying taxes so that you can figure out, A, when it's smart to go either have someone else do it or what to look for. And then B, what you can do to work on your finances so that you don't pay as many taxes, because I don't want to pay taxes. So tax credits and deductions, you've probably heard this thrown around a lot. Anyone ever actually taken a tax credit for something? Yes.
Donating stuff.
Most likely. Anything else? I guarantee all of your parents have done this, probably. There's actually a pretty big tax credit for having kids. You get like $3 grand or something like that. That is actually pretty interesting because if I owe 20 grand in taxes, but I get a $3 grand tax credit, I now only owe 17 grand in taxes. So credits are awesome. Credits are fantastic. Deductions are all right. They're better than nothing, but they're not as sweet a deal. In those cases, you would just take it, instead of owing money on my $100,000 earnings, I now owe money on like $97,000 earnings. So you're only saving your effective tax rate times the amount of the credit, or deduction, excuse me.
It's rather than lowering their rate, you just say how much money.
Yeah, pretty much. So it says the government's really going to only say, hey, we see you having earned this much, but we have a deduction for this. So we'll pretend like the money you earned to spend on that thing, we're not really going to bother with. So it's stuff that the government really likes, like, hey, I need to go buy a house, right? So like a first-time home buyer incentive will either be a credit or a deduction, I'm not sure which. But it's like the government's, hey, we like the fact you're getting a house, we kind of support that, we're going to count some of your income towards it. And a lot of honestly doing taxes is trying to figure out the mix of these to do, like get all the tax credits you can, and then get all the deductions you can. As your lives get more complex, they'll just come out of the work and hopefully you'll be able to find some interesting places to eke out things. Which brings me to a great example. What is this, Jim?
It's the new vegan Tesla.
So you can actually get a killer deal on this. There are a lot of states that will give you tax credits for these. So you go and you walk off the lot and you immediately get like $3 grand back from the government. It's actually pretty significant. So doing stuff like this, it's like, hey, how can we make electronic cars more effective and more actually in line with what a consumer would buy? The answer to that is a lot of states actually give tax credits. So you get almost $8 grand from the Fed for buying a Tesla. So when you're like, hey, I can buy a Tesla that's about to be $35,000, and immediately a quarter of that gets evaporated away because of tax credit. That's fantastic. Then you think about like Maryland. Hey, we have an excise tax credit, right? So you might have to owe some stuff for gas, but in this case, we'll give you a fee there. Rebates in Massachusetts and other places. But yeah, a lot of people love you to buy cars. So if you're in Maryland, you can get a third off the car just because the government is saying, hey, we like that. Another aspect of doing your own taxes involves kind of protecting your investments. This doesn't really apply to you, but it's still important to go through and try to explain in the event that, I assume that's Devin dropping. Yeah. This is still pretty important because when you run into it later on, it's good to know at least it exists. A thing called tax advantage. 401ks are a classic example of that. Anyone know what like a 401k or a Roth 401k is?
Don't make me explain.
No, you're not explaining that. Anybody?
What was that?
Man, okay. Do you know what a Roth 401k or a 401k is? Go for it.
It's an investment vehicle. So you have an investment and you put things into it and you drive that investment vehicle, per se. But basically, a Roth IRA is an IRA account. So there's a difference between IRA and Roth IRA. Roth IRA, I believe, you can put money in and it gets taxed. Don't take. And then after you pull it out, it doesn't get taxed. So basically, it's an incentive for you to put money in and then basically save it and invest it however the fuck you want. And then an IRA, you can put things in and it gets taxed as it comes out. With a Roth IRA, you can also put that towards like a down payment on your house. So Roth IRA is better.
Yes, that was actually incredibly thorough. That was great.
Wow, cool.
Yeah, he nailed it. You have two types of these things. There's a Roth 401k and then there's a IRA, and then there's a normal IRA. Normal IRA, yeah, I throw money in. I don't tax on it at all. So if I put 30 grand in it from my 100 grand that I earned, I'm only paying taxes on 70 grand now. But at the end, when I'm retiring and I pull it out, I owe money on all of the principal and all of the interest that I'm pulling out, which is very bad. The Roth is something that's more recent, and it actually is kind of what Ray said, is trying to get you to invest. So it says you'll put your income tax, you'll pay your income tax on the stuff you throw in. And then when you go to take it out, all of your interest and principal is tax-free. The cool thing about that is, like you mentioned, you can take some out for like down payments on houses and stuff. Since you've already paid money on the thing in the Roth account, you've already paid taxes on it, so they count after tax dollars. So it just means you can do more stuff with it. This isn't necessarily like, hey, let's learn about Roth 401ks. It's mostly, there are certain things that are really, really beneficial tax-wise. Be they like 401ks or certain types of like annuities or like, hey, I'll give you $1 million right now and then you'll pay me out over time. That's oftentimes how lotteries are paid out. You actually get an annuity that will give you money over an extended period of time. So it's kind of important to, hey, where do I park my millions of dollars in a bathtub with cash and no fees? And you got to figure out where you want to put that. The other thing you want to do is look out for people who have fiduciary duty. This means that they're actually legally bound to act in your self-interest. This is not the case with a lot of upper-level investment advisors. Like Goldman Sachs has a classic loophole that they actually do not have to act in your best interest. Whereas CPAs and other people are actually bound by law to do the best thing for you financially. It's really kind of annoying that not everyone is held to that standard. But like insurance agents, classic example, they don't actually have fiduciary duty. So they can say, oh yeah, buy this insurance thing, it'll be great, it'll all work out. But it can actually rip you off. So that's just something to be aware of. But all the time they'll say like, yeah, buy an annuity and throw it in this thing and it'll all be tax-free and go away. It's like, no, that's not smart. So Google is your friend. So yeah, 401ks are great. Also, making more money never ever hurts. There's a really common myth that is, if I'm like at the edge of a tax bracket and I go make more money, I'll actually lose money because I have a higher income tax. Where in reality, they say there's like a $50,000 mark for like 10%, and then from 50 grand to 100 grand I owe 20%. I only pay 20% on that top 50, and I only pay 10% on the bottom 50. So I don't have to go back and pay extra money on what I've already earned once I go up the tax bracket. So it will never ever hurt you to make more money. Picking where you live, again, keep in mind that you can spend a lot more money depending on where you go. Even as you go through life, like a lot of people go and retire in Florida because it's just cheaper. Like there's just not very many taxes for the type of thing retirees do, like taking things out of Roth 401ks and stuff. And then lastly, you should totally use a professional once you actually get anything that looks more complex than you can explain in a couple sentences. At this point, I don't use a professional. I would totally use a professional like the minute that I started making money at a job, just because the odds that they'd be able to find something is probably pretty high. And once you do anything complex, I just wouldn't be able to figure it out. And then going on to actually how you do your taxes. So if you have any questions, feel free to ask. But this is kind of what I would suggest you do like this year or the next couple of years while you're just going through school. I currently use TaxAct. I love it. It's pretty easy. There are a lot of services like that. It's pretty free. They also update them every year. So they'll all the time say, hey, you qualify for this. I'm like, okay, cool stuff. They're also reasonably free for even multiple states. Like I've had to do some stuff where it's like I have to pay in New York and other places. So I don't know, how many of you have done your taxes before and or used a service like this? Okay, so like half of you. Yeah, okay, that's pretty good. I would just recommend it. It's pretty easy. They've gotten really, really good over the past couple of years. And that's what I would suggest if you don't have anything terribly complex. And then, how many of you have actually had to fill out forms like this from the Fed, where you're like, I gotta figure out when I actually withhold things? All of you should have had a job at some point and have filled this out. Yeah, these are junk. These are just total junk. You should not take any random advice from any tables that the federal government puts on your desk. The objective is to kind of minimize the amount of stuff that you give to the government. You want to get like at the actual amount you owe. This has actually gotten a really big problem lately with some of the things we'll discuss later, with people like stealing or like filing false tax returns. So if you only owe $50, who cares, right? It's much better to not have to worry about that much. So I never use tables. I usually just say, hey, you know what? I'm actually not going to need to pay taxes on this. So I have far fewer returns than I actually need. It comes out all right. But it's up to you. And then, do most of you get like very large returns? Like, do you return? And, yeah, I'm sure you do. But
Not this year.
yeah, so that's actually pretty bad. You should work to make sure that you don't. Again, give the Fed a tax-free loan. It's always better to have the money than not know where it is. And don't depend on your refund. Oftentimes, who's heard of like the whole IRS problem with people filing false returns? It's pretty big, actually. Yeah, they really stink at this. The IRS is pretty inept. Anyone know the process? Care to explain how the scam works? All right. So I managed to get Anthony's information, and I say, man, Anthony had a gangbusters year, but he also had what, like 15 kids that he didn't end up having, and he bought like 3 houses, and he's just going to get a lot back in his return this year. So I say all those lies about Anthony. I turn in his actual filing for him, and say, hey, I just mailed the check to me. So all of a sudden, I get a check from the IRS because he is now filed, getting like 50 grand back or some amount of money on that. And then he's stuck